And now, the moment you've been waiting for all week, Courtney Smith's weekly video newsletter, TradeSmith.
Wow, 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 wow. Yes, look at this market just accelerating to the upside. It's incredible and filling our pockets with gold. Gotta love it. Hey, everybody, Courtney Smith here with TradeSmith, the weekly video newsletter for Monday, January 22nd. Let's get right into it. And I think I'll just talk for the next hour and a half about this page. It's so fascinating. The characterization, the plot line, it's just unbelievable. Now, look at this new all time highs. Now, the purple predictor stopped being quite so bullish as it was before, but it's still in excellent shape. So this new leg, yeah, sure, of course it's going to run out of some gas, but we're in a bull market, baby. This thing is skyrocketing up. We've made a ton of money here. I've been keeping you on the right side of this thorny thicket of stock market analysis. Let's take a look at the Dow Jones. I'm going to look at this one and tear this one apart a little bit more. So first of all, there's the green line and the red line. And I've talked about this week after week, but I'm going to go a little bit more in detail here. The green line is what's called DI plus or directional index plus, and it registers buying pressure. The red line shows selling pressure. Now you can see, let's start with the red line. It's almost at zero. There's like no selling pressure going on at all. And in the last week, since we last talked, it drifted down a little bit, showing there's actually a little bit less selling pressure than there was before. But look at up top, and here what we see is we see that the green line has come down sharply, showing that the buying pressure is less than it was before. But I put a big purple line across the top, and this chart goes back almost a year, and you can see that the green line, when it gets up to that level, it nearly always comes down. Now, that doesn't necessarily mean that the market does anything more than go sideways. So take a look, for example, in October, we saw the green line, the DI plus, get up to near the purple line, which means there was incredible buying pressure, and then it turned lower. But now look at the price behavior. The price behavior was, the price dropped 1%. That's about it. So the selling pressure never really accelerated, but the buying pressure went down. So we're in a situation where the market could go sideways, but it's not going to go into a bear market because there's not an increase of selling pressure. For us to have any type of a bear move, we need to see that red line starting to go up and the green line go down. And we do not have that situation right now at all. So still a bull market. We've got to be long. NASDAQ, same story as S&P and Dow. So let's move on. Seasonality. Look at what happened on Friday. New high close. And the purple predictor is accelerating to the upside. So our seasonality indicator, which is the Russell 2000, remains on a buy signal, which means you should be looking at having positions that are 50 to 100% larger than you normally would. If you normally buy 100 shares, you should buy 150 or 200. If you risk 1% of your portfolio, you should risk 1.5% to 2% of your portfolio. This is one of the reasons why we are crushing all the competition, because in the midst of a bull market, not only do we have great stocks, but we have twice the size of normal of them. We're making double profits in a major bull market. That's the ideal situation. That's how the pros make the big money. And that's how you, as a loyal TradeSmith viewer, are making massive money. You are making massive money, right? Well, you are if you're following our advice here in TradeSmith. All right. Now, I mentioned last week, I went into detail, so I'll only spend a second here. Normally, the market in a mid-year election year should have a dip here in January. That's over on the left-hand side. Through the whole month, we have not. When the market goes up, when it's supposed to go down, that is super bullish. You can see that coming up in a week or so, we actually turn into a very, very strong bull market. So when the bearish pressure of the negative seasonality is released and we move into a period of positive seasonality, the seasonality will be extra strong. So look for a very strong period up until April in this market. We're going to be making a lot of money here in the next couple of weeks. So make sure you tune in here to TradeSmith to keep on top of it. And if you're a fully paid up member, then you get all the specific trade recommendations that you're making a ton of money on. Now, the yield curve, let's go into this one a little bit more detail this year. The yield curve at its extremes is an unbelievable 1 year leading indicator of the stock market. So, two things on here. Number one, you can see that the yield curve was very wide a year ago. That's where the yellow arrow is. And that's bullish for the stock market right now. But you can see that it starts in a month or so, it actually starts to get less and less positive. You can see in the lower right hand corner, we got down to 1.00. Now, at extremes, all bear markets have been led by a negative or flat yield curve. All of them. All of them. Let me repeat that. 1 year in advance. If this line, the yield curve, ever gets to zero, we will have a bear market a year later. So that's why this is so important right now. And we're not in that condition. So we don't have to worry about a bear market in the next year. This has been a huge bullish feature that has really caused this last rally in the stock market to just explode. What this shows is that massive amounts of money are flowing out of the bond market and into the stock market. All stock markets need new buyers. Well, where do they get them? Well, you can get them from people that aren't bullish. They change from bearish to bullish inside the stock market, but you can also suck money from other asset classes such as cash or the bond market. And this indicator here shows that money is massively flowing out of the bond market and into the stock market, thus keeping this bull market rallying. Our stock market risk indicator, also bullish. As this goes up, it shows that there's more appetite for risk, that people are getting more aggressive in the market, and therefore this one's also bullish. Global shares also doing very, very well. Over the last year, slightly worse in the US, but still very, very well. So global shares is a great place. I've been focusing domestically lately, but you can see that global shares have been a fantastic place to be as well and will continue to be. Bonds. This is where the problem is. The bond market is going down, and I believe that it's going to continue to move lower. As bonds move lower, interest rates move higher. The only thing in the whole picture of bonds that's positive is the purple predictor. But the purple predictor used to be very very bullish, and now it's only slightly bullish. So look for interest rates to move much higher. The bond key factors, all of them are pointing up. The gold line, that's gold. The blue line, that's 10-year interest rates in Germany. The chart itself, that's the CRB. All of them are pointing for higher yields in the bonds, which is the green line. So look for higher yields on the bond market. The dollar collapsed just as I told you that it would. And I told you how to play this market, and I hammered it again last week. It's a great opportunity to sell. We've now reached the objective, or almost reached, effectively reached the objective of the head and shoulders top. So from now, still a bear market, but we've reached our first objective. Keep short the dollar. Gold, if the dollar is going down, that means gold's probably going up, and indeed it is. I'm very keen to get involved in the gold market. I think we've got a great, great opportunity here. Let me show you why. Look at our indicators. All three of them are bullish. Now, the last time we had that, gold rallied hundreds of dollars. So this is very exciting to me. You've got to get long this gold market right now. All three of our indicators here are bullish. Oil, we're getting a little consolidation in what's turned out to be a much stronger bull market than I thought. All right, fully paid up members, hang on just a second. All you freebies, come on. This thing's less than a Starbucks coffee every day. You got to subscribe. It's where the cool kids are. All right, fully paid up members, hang on. Freebies, love having you. See you next week.